Alright, good afternoon, it's John McLaughlin. Welcome to another Crossfire session. It's 1 PM. Before we get started, I just want to say, did you know that 81% of people who watch my videos on my different channels are not actually subscribed? Okay, so if you get some value from this and you want to subscribe, you can just hit the subscribe button just below there. Let me tell you, it helps more than you know, and it helps me to produce content like this for free on an almost daily basis. So if you're not yet subscribed, hit that subscribe button, and if you get some value from this, or of course any of the videos on this channel, give us a thumbs up. I really do appreciate that, and I appreciate you watching as well. Okay, so on the charts today, so it's 1 o'clock, it's Crossfire. We've got Euro CAD, we've got Euro USD, we've got GBP CAD and GBP USD. And what we need to do is we need to go on to the 15-minute time frame and put the indicators on. Now, just before we get started, if this is the first time, again, talking about subscribing, but also if you look at the card up there, you'll see access to my mini course. I've got a mini course covering some of the fundamentals of how this strategy works, and essentially it's very simple, but it's always simple when you know what to do. If you've never experienced trading before, if it's a new strategy for you, of course it's going to be a little bit more complicated to pick up. So that course is there. Have a look at that. You get it for free, and you can sort of make use of that as well. So when you follow along, you'll have more idea of really what's happening. Right, with that said, let's continue. So EuroCAD, what we're going to do, we're on the 15-minute time frame. We're going to put a, see there, 1300, just a vertical, oh, that's the wrong one, sorry. That's the one we want. Vertical line on the 1300 candle. And then what we're going to do, in fact, we're going to take off the indicators. And these boxes here is imbalance. That's been mitigated, so we can take that away. And we've got more imbalance to put on, so we'll put that on in a minute. And a couple of trend lines, put those on, ready for 13:15, which is 14 minutes away. There we go. So we've got news. Let me just have a quick look at the news. 14.45. Okay, well, Canadian dollar and US dollar, medium and high impact. So that's going to make a difference at 14.45. Maybe we'll get some trades in before then. Usually these sessions, the sessions that I record anyway, they're about an hour. They don't want to go on much of an hour, but we can keep trading for, you know, till about, I mean, usually with the Crossfire strategy, we used to say between 1 and 3. And in the morning between 6 and 8, so you've got that 2-hour window. What we found is there are still trade opportunities to take later on. So for this one, early into the afternoon, so it's still relevant. So you can still put your alerts on and come back and see. So, let's have a quick look at the imbalance. So you see this big candle here that's caused some imbalance. It's mitigated it to a degree. So we're going to put the imbalance on there and just up to that there. So what I tend to do, I've got to click the cogwheel. I've got a little template, just says imbalance, just essentially because I'm a visual person. I like to see things, and we'll just bring that across, make it a bit neater. And we've got further imbalance down here. Oh, have we? Yeah, we have. Just to there, look. There it is. So the cogwheel, that's quite a hefty piece of imbalance, that. And of course, price may want to, well, we know price needs to come back to mitigate that, because essentially imbalance is money on the table. Okay, big financial institutions leaving money on the table. That's just been mitigated, okay, from that previous imbalance, so we can take that away. This has all been mitigated from this price action here, so that's good for now. I'll just have a quick look at the top just to see what we've got. Yeah, we have. No, we haven't. We've got a tiny bit there. I'm going to put that on. And again, all these things like imbalance and points of control. Actually, we haven't not. See, look, we've zoomed in, so it's no, that's not imbalance. Do we have imbalance here now? Okay, so yeah, all these different points of interest, areas of interest, they are all relevant and important to factor into your whole trading strategy. Right, so with that said, Euro USD, what have we got? Big moves to the upside. So this is on the 15-minute time frame. There we go, that's 15 minutes. Put our vertical line on the 1300 and a couple of trend lines. Oh, too long. It's taken us to 1745, so that'll be okay. Bit of imbalance down here, so we'll put that on. And what have we got further down? Look at this big indecision candle. Some big moves from this morning. This is the open of the market from last night, and then it pushed up. See this? Excuse me. Big moves. Some big moves, which is good. It's what we want, because it's only really this week where the markets seem to have got back to normal. We had a bit of a correction on the 15th. Maybe just a week before that, it started to correct it. Then we had Martin Luther King Day, and it knocked it out a little bit. But now the markets seem to be almost back to normal after Christmas. I know it takes a while, and we're still talking about Christmas, but it does affect things. Right, 15-minute time frame. Take off your indicators. Look at this boy. Look at that one. What's this? This is 54 pips. We haven't seen many of those big pushes, and obviously this is manipulation following some kind of news event. But that's kind of encouraging, because that we haven't seen big push. We've seen 20 pips or 15 pips or whatever, but nothing quite like that, sort of 50 odd pips. So that's good. When the banks put in, what would that be? $500 million? Yeah, something like that. It's encouraging. Right, let's put the dashed line on there as well. Right, so what have we got in terms of imbalance? Obviously we've got the imbalance down here. This was previous imbalance, and these are previous areas of interest, and this one I'm going to keep on, because obviously I can see right now it's still, they're all relevant, don't get me wrong, but sometimes you just want to clear up your chart to make your chart nice and clean, so you're not getting misled by too many points of interest and POCs and lines and dashes, and the cleaner you can keep your chart, the better. Okay, so we've just got a little bit of imbalance down here. We'll put this on. So 1308. Okay. Right, GBP USD. What's going on with him? So we've got yesterday's POC. I'm just gonna take those off along with the points of interest, because we can soon put them back on again. And the thing is, I always think it's a good idea, again, clear your chart like I've just mentioned, but also the more times you put those areas of interest on, the more you'll get used to it, and the more you'll refine your skills, and that's the only way you're going to get better at trading. Repetition. That's it. There's no real getting away from it. Repetition. And the more repetitive you are doing the same thing, the more you're going to identify patterns of commonality. And of course, what's the word? Cement compound your learning, and anything in life is all about learning things and applying that into your knowledge, and applying that in good circumstances like this. Right, 1309. So we're ready to go. Euro Canadian dollar. What we've got to do is we've got to wait for 13.15. So this candle and this time frame finishes. Okay, this candle finishes painting, as we call it, and then it forms a new candle after the 15-minute, and then we can put these trend lines on. And essentially, the basis for the strategy is we want the price to go above the green trend line for potential buys, and below the red trend line for potential sells. I say potential because nothing is a given. Nothing is an absolute when it comes to trading. There are lots of different factors to take into consideration. And those factors are, let me show you. So this is our straightforward Forex indicator. This is something that's been developed over the last 7 years. It's been refined and improved, and this is what we've got now, and it's fantastic. So you can get this if you look. I'm going to be putting a video together a bit later today at the time of recording this video about how you can get started with us in our trading community, because these things don't come for free. And the other thing as well is it's taken a lot of time and a lot of testing to get this right. Okay, so it's highly valuable what we do. The other thing is, okay, so let's talk about the strategy. So we've got wave ups and wave downs. Okay, the first thing we're looking for is a wave up. Okay, a wave up is telling us get yourself looking for buys or potential buys. The second thing is we've got this PSAR. Okay, this dot. Okay, so PSAR is underneath the price. Again, it's an additional confirmation that the price is going to go up. We've also got these wave candles. Okay, and as you can see, they're a different size. So obviously it's green, so that's what we want for buys. Okay, but here the wave candle is getting less. Okay, so that gives us a sort of an additional confirmation that about the volume in the market. Okay, so how else do we know about the volume? We've got this here, this called Wada Ata, and what you've got is kind of 3 indicators in one, and this is really powerful. And sometimes you can just look at this, and you can get in a trade or stay out of trade depending on what this is saying. So you've got the histogram. Okay, now the bigger the bar on the histogram, the more volume, the more positive the move. Okay, and obviously the histogram is dark. Now the histogram here, as you can see, it went from dark green to light green, and that indicates weakness, as indicated by the fact that it lost volume and it went back into what we call the dead zone. Okay, this blue area. And if you're in the dead zone, we don't even want to be considering getting the trade because there's not enough volume in the market. Okay, and also we've got the explosion line, this white line here. Okay, now if the explosion line is moving away from the dead zone, that gives us an additional confirmation. Okay, when it starts to come back, if you see here, it wasn't even very far away from the dead zone, then it sort of curled back and ended up inside it. So you don't want this. Okay, so right now what have we got? Okay, we've got a little bit of volume. Okay, and you can just see, look, there's volume there. It looks like we're going for a buy, but where we are here, we're at this orange line, which is a pivot. Okay, and pivots are just potential reversal zones. So this is a resistance 1. We've got the pivot, and we'll get support 1 and support 2. So where you've got these, and the simple way to get this is it's called pivots. Okay, you can go to indicators, you can type in pivots. Okay, you can add it to your chart for free. Okay, and make sure that you need TradingView as well. Okay, to put that on. So what we're going to see is currently the price right now is in resistance, because even though it's gone over the line, it's still touching the line. Okay, so even now, price could bounce or break from this pivot. Okay, and then really what we do is if we're going to consider whether price is going to bounce or break, bearing in mind we've got 54 seconds left, then we look left and we say, okay, what did price previously do at this area? Okay, and what areas do we have where price could stall? Okay, so of course we've got this big push down, then another pivot and a previous high. Okay, so this is when I put my areas of interest on. So I'm going to put it on yesterday's pivot. Okay, and then we can go, okay, it's still in resistance, but if it does push through and this pivot then becomes support, where is the next area of interest? And if we were to get into a trade like this, you know, would there be enough in it? Okay, 16 pips. We could get our 1 to 2 ratio, and that's what we're looking for with this. We're looking for a 1 to 2 risk to reward ratio. We're not interested in how many pips. Obviously, you know, if the distance between there and the pivot was like 4 pips, then we know, okay, there's not enough in this. There's not enough legs in this to even consider it. Okay, when you look at things like broker spread and what have you. Okay, we're 13.15. So here's what we're going to do. We're going to look for the higher high. Okay, so we're going to go left, and there are no previous higher highs. This is the open of the session. So what we're going to do, we'll put our magnet tool on. We're going to go over and pop that on there, and we're just going to put this line on horizontal. All you do, okay, you grab it with your mouse. Okay, you click shift and let go, and it puts it horizontal. Okay, perfectly. So let me take the indicator off. So the lower low from this wick, or the next low, is the one next to it. And so I explain how to do this. It's dead easy, but again, just practice it. But I explain this in the course. And that's us. We're done. Okay, so we're going to go on the 2-minute time frame. Then we're going to put the indicator back on, make it a bit bigger so we can see it, and we'll move on to the next pair. Euro USD. So we have magnet tool. We have the top of the wick, and is that the, no, actually what I'm doing, the higher highs there. There we go. So because there's no wick, what I'm going to do, I'm going to bring it through the center, or as near as we can, the center of the body. Okay, and the lower low here, let's make it a bit bigger so we can see it. I think the lower low is going to be this green one. There we go. 2-minute time frame, indicator back on, make it a bit bigger so we can see what we're doing. There we go. Beautiful. Right, GBP CAD. So, magnet tool on. The higher high is this red. Oh, come on, play the game. Oh, I've put the wrong thing on. It's not the magnet tool, I put the lock tool on. That's why. Okay, so the higher high. The higher high is this one. You don't have to be very intelligent to do this. Alright, the lower low is the green candle next to it. And we'll put that just underneath the wick. There we go. Okay, good. Well done, John. Pat yourself on the back. You did that successfully. Take off the magnet tool. There we go. Okay, good. 2 minutes. That's indicators back on. GBP USD. Again, very similar price action to the last one. We'll put the magnet tool on. We'll go and have a look at that. The higher high is the red candle, and we'll bring this one down just to the top of that wick. Just it's got a little, so we've got a little wick on there. The lower low, and just underneath. There we go. Magnet tool off, 2-minute time frame, and we're good to go. There we go, nice. Right, Euro CAD, what's it doing? Okay, so as you can see, the price right now is in between the two trend lines, the green trend line and the red trend line. This is what is often and affectionately known as no man's land, which means we just wait, we don't go anywhere, and we're just going to wait and see what price does. And what we want price to break above the green or below the red. Okay, so first of all, where are we? Are we in a wave up or wave down? We're in a wave up. Okay, so ideally, because what we've got is what I like to call clear air. Okay, so if price comes above the green trend line, or it'll approach the green trend line and it will find resistance. Okay, there you can see it came up, had a little sniff, came back down, went up, bounced off. Okay, bounced all the way down, may well come back up again. It may bounce all the way along, but like I said, any line, price is going to bounce or break. And the other consideration is we've also got this pivot line as well. Okay, so this pivot line is going to be resistance, so it's going to be interesting to see what happens with this. We'll just let it play out, and I'll talk you through it as it goes. Right, so here we go with the euro US dollar. Okay, the US dollar has gone above the green trend line, but only just. Okay, only just. What I like to see if I'm going to go in for a potential trade in terms of price action is a gap, a bigger gap between where the price is now, where the body is, and this area. This area is quite congested. You can see you've got your green trend line, you've got your pivot line, you've got your 5 moving average, and it needs to break away. So I would say yes, there is a tiny gap. Okay, that is tiny. Okay, and at any time it could come down. So it's still almost, it wants to break away, but it's still in resistance. If we look at the other considerations, we are in a wave up. The PSAR is green. Okay, obviously the wave there, look, the wave's fairly consistent. The Wadarata, what's that telling us? It's telling us don't get too excited, bud, because look, the histogram is low. There's not a lot of volume in there. And ideally what I like to see is moves like this where the histogram is above this explosion line. So the explosion line is moving away from the dead zone, but what it's telling me right now is look, there's not a huge amount of volume, and also it's showing me with a lighter green. Okay, and look what's happening. All you got to do is look at price and go, oh yeah. Okay, so these are additional confirmations. They will tell you what happens at the time. Okay, they don't predict anything. Okay, that's whether you get in a trade or out of a trade depends on you, but you look at everything together. The other thing we look at as well are also the moving averages. Okay, so here you've got you can put whatever colour you want on. Okay, but it's a 5 moving average, the 13, the 62, and the 200. Okay, and what I like to see them in order and also pointing in the direction of the trade. Okay, so clearly if we're going to go for a buy, it needs to be pointing upwards. Okay, and downwards for a sell. And right now it's just going back down. It's going back down. Okay, so this area here, this pivot, this area is quite an area of resistance. So we've got to wait and see. Right, GBP CAD, what's happening there? It's it's come below. There's the red trend line, and it's come below the red trend line. And obviously, this strategy says, okay, if it goes above or below those trend lines, then consider getting in for a potential trade. But what have we got? Okay, first of all, it's hovering here on the yellow trend line. Okay, on the 13. So the 13 is offering resistance right now. Let me make it a bit bigger. Then it's like a game of 100-meter hurdles. All right, not a game, but you know the Olympic sport, the hurdles. I know you don't need to explain it, but there you've got, this is the first hurdle, the 13 moving average. The second hurdle is a 6-2 moving average. Another hurdle is the pivot, and then you've got the 200 moving average. Another hurdle. Then you've got imbalance. Is this imbalance still relevant? Yes, it is. Okay. So there's so many hurdles to get along the way, and what you've got to say is, can I actually make any money at this? Will I get my 2% out of this? And if the answer is no, then you disregard sells completely, because you're just wasting your time. All right. So look, if we go to here, hang on. If we go to shorts, okay, if you're going to short this, in fact, no, I'm not going to. I'm just going to measure it. So if we measured it probably from where price is right now, it might look quite enticing. Okay, 12.5 pips to that moving average. And obviously price has got to do its thing before it turns, so that margin is going to be less. It'd be like 9 or 10 pips. and by the time you factor in broker spread, obviously how much your broker is going to take off you in terms of commissions, there's not really enough in it. And as I always say, it's like buying your investment property for market value. You don't do it. You go in there and you offer 30% less every time. Everything. How much is this house? This house is 100,000. Well, you go in there and you go, okay, I'll give you 65, and then you get left out the room. Okay, but then when you finally get it for 68 or 70, who's laughing then? Right, GU. Let's have a look at GU. So GU's trying. It's trying to get over this little line, over our trend line, but it's not found it yet. It's still in resistance. So again, we're just gonna wait. Just gonna wait and see. Be patient. What are at our luck? Running out of volume. The explosion line is going back into the dead zone, and we just wait. We're not bothered. There's no stress. We're not being forced into a trade. But if this does go above, okay, bearing in mind that we've just formed a new candle on the 2-minute time frame, but if it does go above, then what have we got? We've got these highs here, okay. So an area of interest would be conservatively about there. See how it's tapped it there, it's tapped it there, it's tapped it there, right? Wicked it there perfectly, tapped it there, wicked it perfectly there. So that is an area of resistance for this price action, okay. And we're still in resistance anyway on the green trend line, so we've still got to wait. And then if price, then I mean, sometimes you can just tell if price is going, okay. It's like releasing the greyhound, like it's gone, okay. Okay, that's positive, you know. But from there, nice bit of a push, okay. Then we've got this area here, okay, which is quite some distance away, or it's a reasonable distance away. And then we've got these highs here, okay. Then what have we got? So we've got to look at previous price action before we look at anything else. Like I said, this is still in resistance, but if we measured it from where price is now, okay, up to that, we can see, look, there's the area of interest. Look what it did. It peaked it perfectly, absolutely perfectly. So what I want to be doing is making sure price goes above our area of interest, okay. So we've got 1.9 pips. Okay, crazy. Okay, we're not interested in that. So the next area would be above the area of interest up to the next area of interest, which is 11 pips. And if we can get the right stop loss, okay, remember the first and foremost thing in your mind is protecting your account, and then thinking, okay, protect our account first with a proper stop loss. Can we then get our 2%? And if the answer is no, and you do this, you go, right, okay, well, it's no, go to the next one. Simple as that. If they don't want to accept my $60,000 for the house, there's my offer, walk away. Week later, the estate agent's on the phone going, that offer you wanted, is it still relevant? Yes, well, it could be. I'm thinking more like 50 now. Yeah, just walk away. Walk away. Do not get emotionally involved in trades. This is going up. This looks interesting. Okay, so very interesting. That's quite tasty, to be fair. So if we look at, I know really we should have a look at that. So as an area of interest, we are that's quite good on that area there. Okay, I kind of ignore these big pushes because you can sometimes get a bit carried away with your optimism. But yeah, there we go. Look, unfortunately, I've kind of missed that one from chatting. In fact, let me look on the 15-minute time frame. I'll have a bit more of a zoom out. So yeah, there's the area there, and that's yeah. Have we got imbalance there? Yeah, no, we've got imbalance there. We haven't got imbalance there. It's been taken out. That should be hard. Right, let's put a to that. Right, we're here. So we're on the 15th of Jan. Let's go on the 15-minute time frame. So there's where price is right now. Imbalance here. And there's imbalance. I'll put there. And there is imbalance a bit further up, just here. I'll just leave that as it is. Messing about with TradingView. So if we went long on this, see, we're still, I wouldn't go long yet because we're still straddling this area of interest. 48 seconds left. Okay, and what I want is for it to break clear of that to then move up to that imbalance. However, if we were to take this, okay, let's work out our stop losses and everything else. So the indicator gives us the engulfing candle with this triangle and also a line which says, okay, this potentially could be quite a good stop loss. Okay, but I like it a little bit further down. I mean, yeah, it's 10 pips. It's a little bit tight for this strategy. So let's take it to the engulfing candles below there. Okay, and we're going to go up and we're going to see if we can get a 1 to 2 before it gets to the imbalance. And look, it's just taking it past. Which for me is, it's a little bit tight. It's a little bit tight, that, because what we find is the price will find resistance here. Obviously it's going to find resistance at other areas, as I've just shown you, and as you can see, the price is now reversing, but that could just be temporary until it breaks clear of this area of interest here. But again, you know, patience is the thing we want. So if we look at this in its entirety, so we're in a wave up. We've got the wave candles with the PSAR is underneath, although it did start off quite strong, and the distance between the body and the PSAR is getting less, which again does indicate, or can be an indicator, that volume is running out. The moving averages are in order, okay, and they're pointing in the right direction. Wadarata is the explosion line is now starting to move back towards the dead zone. It's kind of hooking over like this. And look at price. What's happened to price? It's just stopped. You know, it's like not doing anything. Okay, so is volume dropping out? You know, are the sellers now taking over, and are the sellers in control? And what you've got to ask yourself is, okay, I want a gap between this point of interest, this area of interest, and the body. Okay, is this candle giving me confidence that it wants to go up? And it's like, no, I'm going, off you go. Okay. No, it's not. Okay, is the answer. Because it's coming back and it's like testing that line and it's weak. Okay, the buyers are getting weak. And that's what the Wadarata is saying to us. Look, it's getting weak because it's a lighter colour, and also now it's dropped below. Okay, so what would have kept us out there? Number one, price action, the candle, the Wadarata, and just the confidence that we had. The overall feeling of the trade was that it wasn't very confident, so we stay out. Okay, and now look, it's gone back into the dead zone, and this explosion line is now hooking back, coming back into that dead zone, or facing the dead zone area. Now look at the price. Okay, so we always wait. But again, I didn't like this particularly because 9 or 10 pip stop loss is ideally nice. Not for some reason 7 pip stop loss is great, because you can normally get you 1 to 2. Okay, let's have a quick look. And like I say, it doesn't matter how many pips you take. You've got a $50,000 funded account, 2% is $1,000. 80% of that, which is what I mean, you can get a bigger profit split, but generally you'll be making $800. So this move here, okay, is potentially $800, right? Based on that scenario. If you had a $200,000 account, which is the next one I'm going to be going for, and then subsequent 200,000 after that, okay, 200,000 is $4,000. Okay, so that move is $4,000. 80% of that is 3,200. Okay, 1% is what you're risking, and don't be under any illusions. You will make losses, and what you've got to do, you've got to build up that tolerance. If with the bigger accounts, you know, if you start trading with like $500 and you get used to it, and you go into drawdown, and you go, okay, I'm, you know, $2 in drawdown. There's no reaction to that. Okay, not really. But when you're on a live account, or even if you, if you're on a live account, okay, and it's $50,000, and suddenly, you know, $200-300 in drawdown, okay, it makes a big difference. And then you upload. You upgrade to higher and higher numbers, okay, and suddenly, you know, you're trading with, you know, multiple 6 figures, you know, when you're thousands of dollars in drawdown. You've got to be able to handle that, and you've got to have the balls. Okay, let's just talk about it. You've got to have the balls to stay in a trade and go, okay, I'm $2,500 in drawdown, but I know price is going to turn because I've done the assessment and the analysis in the right way. Okay. And it turns and it goes, and you take your profits. And what do? Do you celebrate? No, of course you don't. You go, okay, that was good. Let's learn from it. Let's move forward. Right, so GP CAD. It's like I said, it's congested. It needs to break past this moving average, the 62. Then it needs to break past the pivot. And as I said, would you bother with anything on here? No, not really, because nothing is giving us a great trade. So from there, 6 pips to the 200 moving average, 10 pips. And at any of those lines, price can bounce or break. So I'm just going to stay out. Not interested. So GBP/USD is pretty much doing the same as Euro/USD, which is obviously because they're both USD pairs. Although this one reflects the euro and this one reflects the pound. So again, we're just going to wait and see what's going to happen. But you know, just to if you looked at this, okay, without putting this area of interest on, you would look at this and go, okay, price has gone above the green trend line. We're going to get in the trade. Okay, it looks good. Okay, it's gone up to, all right, well, it did peak at 9 pips. Okay, so if you look at your spread, you might scrape 5 pips with that. Okay, but certainly you wouldn't get your 1-to-2 ratio. And you'd look at that and you go, well, why did price do that at that area there? Okay, go and look left, and just put the easiest thing to do is this. Right, let me show you. Right, random line on the chart. Okay, so now what we do, we're going to grab it and we're going to look. Okay, there's a peak there. Okay, oh look, it's peaked there as well. Okay, oh, and it's peaked there. So very quickly you can see where these areas of interest are, and these areas of interest. See how price topped out there, and then there was a big rally down, and then it went sideways. Okay, so a little bit of consolidation, down for that rally, and then sideways consolidation, and then down, and then sideways again, quite a bit of sideways, and then down again, and then back up. So what you've got to do, you've got to identify these areas, okay, of sideways movement, and they're so accurate. You know, this is okay if you're looking for a buy. Okay, here's the tip. If you're looking to take buys and you're looking to put these areas of interest on, put them on conservatively without your optimism bias. Okay, so if you say, well, look, now if you look at this, okay, so if we said, okay, well, price went all the way up to there. Okay, so yeah, all the way up to there on that line. That's where I'm going to put price. That's where I'm going to put my take profit. Okay, and it's wrong. Okay, so what you want to be doing is bringing it down and saying, where did I get more touches from there? Okay, it's here. Look, everyone touched. That one came up, touch it. So that is where I'm going to take my take profit. Conservative, all right. So anyway, let's continue and see what's so Euro CAD. Again, this is not really doing anything for us. It's coming down to the 62 moving average, and from there, what have you got? 2 pips? Yeah, 2.2 pips, and then we've got 13 pips down to the 200, and then at the top of the imbalance is 19 pips. However, we wouldn't even consider getting into this trade until it came below the green moving average, the 62, and if it does that, then we've got around 10 pips. But the question is, could we put our stop loss in such a place, in a sensible place, and take our 1-to-2 ratio? And this isn't ready yet. This isn't even ready to look at yet. Okay, so we're going to come back. Euro/USD, that's just doing its thing. It may well come back down to below this area. Let's just take that off just for now. It may well come below this trend line. Okay, if price comes below the red trend line, then obviously then we've got to then consider, okay, where could price potentially go to, and that's all we're doing. Okay, so from kind of this area, potentially it could come down. It's very similar to the last one we just looked at, 10 pips down to the 200 moving average. But again, there's lots of other things to be taken into consideration, like the WAD RATA, like the PSARs, like the waves, like the moving averages. Right, GBP CAD. And we've got is it 3 o'clock news? 14:45 news. It's not for an hour away yet, but sometimes you can find that price may well consolidate prior to the news, or maybe not do too much until the news hits. And sometimes, you know, depending on the severity of it, and this is high impact news, you'll sometimes find that the institutions try and do a carrot and stick scenario where they try and entice people to get into trades before the news hits, and then they'll just take out everyone's stop loss in a second. So that's what they're up to. But if you know that as a trader, then you can mitigate against it. But nothing happening there. Euro USD, very little volume. Look, I mean, it wasn't a massive push. Okay, didn't quite push past, but then now it's just hardly anything. GBP CAD. I mean, that's looking better for the sell, but obviously the considerations we've got is it's going to come down to the pivot, and they're going to bounce or break. Then it's going to come down to a 200 moving average. So even though we looked at this and went, okay, for the purposes of the strategy, it's come below the red trend line, and you could have got in here, John, okay, but it's not a great trade, okay, because you're always, when you get into trades like this, where you've got all this resistance and all these hurdles to get over, by the time you get into any sort of take profit, or even if you hit the profits, it's more luck than judgment, and that is not trading, okay? That is just gambling, okay? You don't want to be gambling. You don't want to be shouting at the screen going, sell, keep going. You don't want to be doing that, okay? Believe me, I've been there, okay? When it comes to learning the markets and learning how to trade, I've done all the things that you shouldn't do, and I think a lot of people do that, where, you know, you second guess yourself, you get into a trade because you want to get into a trade because you're emotionally involved, and you lose a trade, so you try and chase a trade in the opposite direction, you lose that as well. It's just, or you increase your lot size to try and get your losses back, and all you do is you compound your failures, because the market doesn't care. The market doesn't care at all. Doesn't care if you haven't got any food in the house. Doesn't care if you're not quite sure what you're doing. Not its markets. It's your job to be just consistent with trading every single day, getting on the charts, doing that back testing, building up that mental muscle, and really sort of changing your financial thermostat, if that's the right word. All right, so this is interesting. We're starting a bit of a push again. Only a bit of a push. 1346. There's no volume really registered on the 1 hour, which tells me this could be one of those fake outs that I spoke about just now, where everyone gets a bit excited. I mean, that push there from here to here, 6.2 pips. And bearing in mind it takes $10 million on average to move 1 pip. So this is over $60 million been put in that in the last minute. Okay. Well, that's not retail traders, that's financial institutions kind of getting their positions ready. And there's very little volume, okay. So that's suspicious. So when's the best time to trade? I get this question all the time. When is the best time to trade? Well, what I would say when it comes to trading is look at your lifestyle and fit trading around your lifestyle. One of the good things about our community is that we have a number of different strategies that we use. The strategy that I use, I use a couple of strategies to be fair, but I'll just do one on the channel. But this one, 6 AM and 1 PM UK time. Okay, now a lot of people are out of work, or it's kind of in the middle of their working day. So we have another strategy, the straightforward Forex strategy, which is a 1 minute time frame where you could literally come onto the charts any time of the day and trade. Or we have a relaxed strategy, which is taking trades over a longer period of time, and it's relaxed because like scalping, it's quick and you've got to be on the ball and you're always looking, and it's like in and out, done. Okay, whereas the relaxed strategy, you can be in a trade a day, a week, a month, maybe a bit longer, okay, and you get into a trade and you come back and you go, oh, that's nice, that's come up. You know, it's on the bigger time frames as well, on the daily time frame is the main one we look at. So yeah, there's a number of different strategies to suit your lifestyle, and that's what you want to be doing, is suiting your lifestyle. How do you want to live your life? Do you want to be looking at the charts all day, every day, or do you want to be, you know, a couple of hours a day or whatever? It's the best thing, and we provide all that, tools, everything. So it's starting to push again. But you can see it's still straddling the line, okay, which means it's still in resistance for this area here. And to be fair, this area tried to break out, but it failed. Okay, so maybe it's going to try and push again. Okay, maybe it might push up to the upside, but currently, what are we on? 34 seconds left on this time frame. Still waiting, watching and waiting to see what happens to price. Let's leave it on here for the next 20 seconds and see what happens. I think it's pretty evident what's going to happen. It's going to just stay in resistance or even retrace. Yeah, that was unexpected. So it's going to go up. See what that light where it is now, where it's going to hit the PSAR. Okay, if it goes up and touches that PSAR will flip and it will go green. So again, that's an additional confirmation for us. We've got the wave up. The moving averages are in the right order. So you see how the PSAR is now flipped. But look at the Wadar. The Wadar is in the dead zone, okay? And we've got no volume here at all. So this is going to keep us out. Every single time, it's going to keep us out. So with the Wadar, what you want, ideally what you're looking for, with the histogram, is the histogram to be above the explosion line, and of course the explosion line to be moving away from that dead zone. So it's kind of starting, and where price is now, we've got a resistance area from this previous high. So if it breaks above that, we may want to consider looking at a trade. Okay, I know we've only got 8.3 pips to that area of interest there, but we may let's just wait and see. So the other consideration we've got now is this. Let me show you. So going long, okay, from here. Stop loss down there. Would you say below the trend line where it's back into safety, okay, and then could we get, where's our 1 to 2? 1 to 2 is going to be off the bloody screen. Alright, so does that move inspire you with confidence? Okay, it's a long way away, and we've got no engulfing candles here. So I mean, yeah, okay, we could maybe push the stop loss just below this area of interest, but it's a bit risky because it's a little bit narrow. Okay, from there 4.7 pips. We know 7 pips is ideal. Okay, but what area do we have where it's relevant for this price? There isn't really anything. So just below the trend line would be sensible. And the realistic profit point is going to be this area here. Okay, and if we go left, we've got the highs here. Okay, so we've got the highs at the extreme is there. Okay, and yet our profit is way up here. So what have we got going left that is any further around there? Not much. Not a huge amount of. So this is where price is right now. Okay, see where it is. So this is the 15th of Jan on the higher high there. Okay, the next high from here takes us off. Actually, takes us up quite a bit. So obviously must have been a trade there I took earlier. On the 12th of Jan, okay. So we might see that as an equal high, but by the same token, it's a big push. Can I look at that now? That's why it looks weird. Long time frame. Right, let's do its thing. It'll do its thing to at least the first point of interest before I think it's gonna retrace. And then if it does retrace, then we look at this and we go, okay, well, what did we actually make on there? Like a 1-to-1? Not even a 1-to-1. So we're risking more than our profits, which is what you don't want. Let's watch this. We may well shoot past it, but currently, see how it stopped it? It's now a ceiling. Okay. 25 seconds left on this time frame. It's looking encouraging. So again, if we were taking this trade, we'd be in profits, and we'd be in profits by 10 pips. Okay, but we've only reached about 1% of our targets. So yeah, $50,000 account, you've made £500, $500. You know, and you can keep 80% of that. Which is great if you're monitoring the trade, but if you're not monitoring the trade and you walk away, potentially you could just get taken out, go into your stop loss and get taken out. See, look, these areas of interest work. See how it's like, okay, well, where's the previous? Oh yeah, I want to go down back to the area of interest, please. Right, let's have a quick look through. So EuroCAD is not doing anything. Euro USD, okay, that's gone. I should have been looking at that. This is why I don't always take live trades on these sessions, because I'm gassing too much. Something I learned early on, and it's. But yeah, area of interest. It's pushed past it. The next sort of take profit level is the bottom of this is the imbalance. The bottom of the imbalance is always a nice area. Okay, so if we looked at this just past the area of interest, could we have taken some profits? So we're going to go long. So if we got in, say, here, then if we use the indicator as our stop loss, it's only 4.3 pips. Down here is 6.7. That's kind of nice. If we go up to 1.2, look at that. That is a nice trade, okay? Because we've got an average of 7 pips. We're at a sensible level for the stop loss. We've gone past our area of interest, and our profit level is below the next area of interest, which is the excuse me, the bottom of the imbalance. Okay, so that is a decent trade, even though it's started to retrace. So yeah, look, I mean, the Wada Atar is running out of steam in the dead zone. Let's just push that over that way a bit more. And this is what you do when you trade. When you trade in this strategy, what's happening with price? What's the correlation of price between all the indicators that we've got on? Have we got any areas of interest? Where could price potentially go to? And is there enough in it to profit? And that's kind of the constant thought process. Okay, and of course you're not going to win every single trade. People that get onto the markets and they say I've got 100% win rate. Okay, they're not traders. They're just using some kind of nonsense AI. Okay, if you work out the maths, and we'll probably do a session on this. If you work out the maths whereby you've got a 2-to-1 ratio, okay, and you've got something really poor like a 65 or 70% win rate, okay, you will still make money at this, okay, because you're factoring in a risk to reward ratio rather than taking pips. Okay, it makes a big difference. Even if you lose 40% of your trades, which makes you, a really naff trader, you will still do very well. Okay, because the numbers, the maths works. Right, so GP card. So look at that. Okay, yet again, still got to come down to the pivot. Then it's got to go down to the 200 moving average, and then the top of the imbalance. So what have we got from here? Well, first of all, we've still got the 62 moving average to get past, which there's too many obstacles. Lot 1.7 pips. Okay, imagine taking 1.7 pips and paying 2 pips of broker spread. That's not a good equation to be in. 8.5 pips for the pivot, 11.6 pivot, 11.6 pivots, 11.6 pips to the 200 moving average, and then 20 to there. But either way, by the time it goes past these areas of interest, you've got to reset everything. You've got to reset and go, okay, now it's from there to there, and now it's from there to there, and now it's from there down to here. Okay, and there just isn't enough wiggle room in any of those. What's this? Our pound US dollar. We can let this play out. Okay, we've been on an hour, so time to wrap things up. But what you can do, let these play out, see how they go. Okay, but like today, we've got news on the horizon, but in terms of an actual session, rubbish. Low volume, lethargic, nothing really happening. It's like it's one of them days, okay? And you compare this to 6 a.m. 6 a.m. the open of the London session, and obviously London, the city of London, is the financial capital of the world, and that's where you see a lot of the nice moves and more positive moves with this particular strategy. But we are on Wednesday, it's we should be seeing more positive moves, and right now we're just not seeing that volume. It's frustrating sometimes. This isn't too bad. Some people would say, look, I got into a trade right after here and I ended up making my profits, and if you did, then well done. Okay, you'd have gone into 8.5 pips in profit. You'd have been just on break even or in slight drawdown, and then all the way up to there, 18 pips in profit. But again, looking at the area of interest here, you've got to be careful. And I look for reasons to stay out of trades rather than reasons to jump in. Okay, and it makes you a lot better trader. So we've got pound Canadian dollar. It's a while away. This news is a while away. But what we're looking for here is we're looking for price to go above the green trend line, and then see what we can get above here. So again, areas of interest, quite a few here, look, and then here. And here's the thing about trading as well. Trading is a constant evolution process. You never go, okay, I've got one. I mean, sometimes you do. I've got one strategy, and I trade with, I mean, some of the best traders I know, they have a really simple strategy and they trade with 1 or 2 pairs. That's it. Same thing every day, same thing, same repetitive motion, okay, making a fortune, okay. And what I find is a lot of beginners, they try too many strategies because they don't really understand anything to start with. I did exactly the same thing. You see somebody making a lot of pips, and you go, well, I'm going to do that, okay, and then your whole thought process gets churned up, and you lose the momentum from what you learned in the previous strategy. So a big takeaway is, think about the lifestyle that you want. Think about trading around your lifestyle so it fits, okay. What you don't want to be doing is trying to put, round pegs in square holes. If it doesn't work for your lifestyle, you're never going to make it work, okay, particularly if you're not getting the momentum. So make it work, and then pick a strategy that works for you and stick with it. Just put the blinkers on. Just go, this is my strategy, that's it. And I'm gonna learn this strategy until I become competent and until I become profitable. That's where you want to be. Okay, so let's have a quick look at Euro US. Euro US is going the wrong way. So we'll have to see what happens there. We've got a resistance area here, so it's likely to potentially bounce. You see how this went up? A little bit of a retrace, okay, and up, a little bit of a retrace, pushed up, a little bit of a retrace, okay. We've got the same amount of retrace, or it will be right where it is now, and it may well respond and push back up at that level there, but we'll just see what happens. This area now is an area of resistance. Just stay on this for about 25 seconds left. We'll just see what happens on this. We're in a wave up, okay. We've got the PSAR flip at the moment. We've got the green PSAR at the moment. The 5 moving average is obviously it's moving the wrong way because we're in a downtrend. We've got the 13, which is again slightly moving over. We've got the 62 and the 200, which are kind of in the right direction, and we're just starting to see how it's just started to perform a little bit of resistance on that area there, which you kind of thought it would, and it'd be nice to see this then. See, we've got the high there, okay, came down and it pushed even further, so we are in an uptrend, okay. So potentially price might want to come all the way up here, which would be good, and we'll just see how things go. Right, let's just scout through these. So again, Euro CAD, just lethargic, not doing anything, just resisting on this try, just going sideways. That's all it's doing, going sideways. Euro USD looks like it might be doing a very similar thing to GBP USD. Okay, push, retrace, push, retrace, push. Okay, and that final push, then we'll be able to take some profits if it does that. But currently, look, we've got the PSARs flip red. What wave are we in? We're starting to wave up. That's good. And the moving averages are in order, and as you can see, look, they've started to look up to the sky, which is good. The water atta is telling us that it's running out of volume on the sell and it's into the dead zone now, so this may well flip back. You see this common pattern, look. So you've got nice big pushes because we're in an uptrend, little retrace, big push, little retrace, big push, little retrace. So we might just there might just be enough legs in this for us to go and take profits. The other thing I would say as well is because we trade 4 pairs on each session, the best approach or the best practice is to only enter 1 trade per pair. Okay, what I mean by that is right now we're looking at Euro USD and GBP USD. Okay, well they're both USD pairs. So if something happens to the USD where it either becomes stronger, then we're going to lose both these trades. Okay, so you've got to be mindful of that. So ideally, be in something like Euro CAD and GBP USD where you've got opposite pairs. Okay, and again, that's just best practice. It's up to you what you do, but that's just what we always recommend. All right, an hour and 10 minutes. I'm going to call it a day. I hope you got some value from that. And I know sometimes you go on a session looking for the answers, looking for the definitive answer on how to trade. There are none. Okay, it's all a case of let's assess everything as it comes in and let's process that information as a collective with all the different information that we've got on the screen. And sometimes it can be frustrating. It's a bit like playing golf. You know, sometimes you'll get your golf shoes on and you'll swing the bat, all right, and it'll go lovely, 200 yards, and sometimes you'll just hack the green to bits, all right. It happens, and trading is very similar, okay, when you're first learning. Anyway, hope you got some value from that. If you did, remember 81% of people who watch my videos don't subscribe. So if you like to subscribe, you can hit that button below there. Really appreciate that. And if you got some value, give us a thumbs up, like as well. If you've got any questions, just again reach out to me with any questions that you've got. I'm always willing to answer any questions. That's what it's all there for. I've got my details on there. My text number is on there, and just drop them in the comments below. All right, we'll see you on the next session. Bye for now.